As price continues to rise, the Coppock curve soon returns back over zero to confirm the bullish momentum of the trend. Then when momentum slows down, the curve naturally flattens and even drops slightly along with price. Like with other momentum oscillators, attention is focused on whether values remain over zero. In this case, they do for quite some time, but they remain quite flat and heavy selling is present. With price closing back lower and the indicator crossing back under zero, there's confirmation of a reversal back into a downtrend. Now here's the opposite situation with an upward retracement, except in this case, as can be the situation under real-world conditions, indicator values won't always stay neatly under zero, even though there is eventually a distinct downward continuation. So using this indicator alone is not extremely reliable. So it's preferable to combine it as a layer with other tools and techniques. This could be any combination of referencing basic structures and patterns, or even combining the Coppock curve with other indicators that are complementary to it. And we'll look at these possibilities in the following examples.